We were wrong.
Cathie Wood actually just admitted that she was wrong about Tesla stock. Let's take a look.
Cathie, all credit to you on Tesla. You were right, obviously, early.
To our analysts.
Okay, to the whole team.
And Brett, and yes.
However, what do you say to people when you see charts and the numbers aren't, you can correct me, they're not right, but the direction of the right, where Tesla will be 10% of all auto revenue or something like that, but it has a bigger market cap than the next 12 biggest companies combined. How do you think about valuing something like that? I know maybe 2 years ago you had a base case, a bear case, and a bull case that, respectfully, the bear case at $1 trillion seemed aggressive. Mm-hmm. So how do you defend or how do you think about valuation in Tesla versus whatever?
Well, to be fair, we should also point out that back in 2018, Cathie Wood said that Tesla stock in 5 years, which is this year, would be $4,000 per share. That's before a 5-for-1 split and 3-for-1 split, which would make that price target about $266. And that was her most bullish guess. So that's really close to what actually happened.
Yes. So if you look, many analysts do not believe that autonomous will either be possible or be available anytime soon. So they don't put it in their models.
In fairness to the critics, full self-driving was 6 months away for the
3 years ago.
For the last few years.
3 years ago,
okay.
Yeah.
Also, in fairness to these critics, if you go back to 2018, you won't find many, if any, that will say that Tesla stock is likely to actually 10x, which Cathie actually did say. While critics still have a point, I think Cathie has a better point here, specifically speaking about Tesla stock.
All right.
And we didn't believe that. Our first forecast said 2022. We were wrong.
While Cathie Wood was wrong about this specific point about full self-driving, go back to 2018 and try to look for fund managers that at the time thought Tesla stock is actually likely to 10x and see how many fund managers you find.
Actually, as we talk about this now, we needed the breakthroughs in AI to happen in order for autonomous to happen. You know, I will sometimes say, okay, guys, we were just wrong. The trajectory of AI breakthroughs is correct. Surprising expectations.
Okay.
I mean, blowing them away, actually. In fact, there were no expectations, right?
If you ever go on Twitter, you'll probably relate to Elon laughing at this meme. You might be already sick of hearing about AI because it's everywhere. And some of the things that are happening are, whoa, interesting. Any games with your digital girlfriend, role play with her, get a cute photo from her. I'm not gonna try anything, but if you guys would like to research, the name is Chatopia, leave a comment down below what this is all about. But this is perhaps the craziest thing. You just get a picture and then you just put a few points on a picture and then you just drag it and you can change the whole picture. You can change everything. You will be able to take a bad picture, completely terrible, and then you'll be able to adjust it completely exactly how you want it perfectly each time. That one guy that's sitting at the computer will become probably unnecessary.
Is Tesla the first company to get to a $5 trillion market cap?
We think it could, yes. If we're right on autonomous travel, we think it could be the first to get there.
So that'll be the engine.
Because what is this? Many people, analysts in particular, say, okay, you know, electric vehicles, 25% gross margins. What they're not thinking about is autonomous mobility will have SaaS-like multiples. So gross margins in the 80% plus.
So not car margins.
Not car margins. And in fact,
because it's a service. You're not.
It's a
You're not
service.
buying a good. You're
think of the
paying a
convenience.
subscription or whatever to
Yeah.
have a car on demand able to come and get you.
And so our base case now, I think the stock is around $200. Our base case for 2027 with autonomous mobility in there is $2,000. So
Forgive me.
To me personally, a much more interesting question is, will Tesla be the first company to reach a $10 trillion market cap? Because if you look at, for example, Apple, it's already at $2.85 trillion. It only needs to double, actually less than double, to get to 5 trillion. But currently, Tesla's market cap is only at $670 billion. I say only because I'm comparing that to Apple. And for Tesla to get to $5 trillion in market cap, it needs to about 7.5x from here, and that's quite a bit. In Microsoft's case also, it only needs to double, and they teamed up with ChatGPT, and maybe they will double. But I think getting to $10 trillion in market cap, Tesla has a very high chance to get to that and be the first company to do that.
Base case for 2027 is $2,000. So
Forgive me. What sort of compounded growth rate is that for the next 7 years?
so
I mean,
is that
whatever, it's a lot.
60%, something like
Did you
that?
say, what did you say?
Is it 60?
Wow.
40, somewhere in the 40 to 60% range.
Where does that optimism
is
come
what-
from? Like,
this
how
is-
does your
remember-
brain get there?
I think Stephen Monk Ryan would say that you get there by thinking. Sometimes Morgan Stanley makes a lot of sense in their research, but often when it comes to their price targets, which you can see in red and the stock price in blue, probably you wouldn't really see much of a difference between these two. If the price of a stock goes down, well, so do the price targets. If the stock goes up, so do the price targets as well. These are 1-year price targets. There is an exception right here, for example, where Morgan Stanley did stick to the price target for quite a while, and for that, I give him credit. But yeah, at other times, it's Sometimes, though, they do have insightful research. For example, Morgan Stanley did say that they expected Tesla to cut prices in 2023. They said that last year when Tesla still had a pretty sizable backlog. So they do have some good points sometimes. But right now they are saying that you should buy Tesla stock, but their price target is $200. Tesla stock right now is trading at almost $214. So you're telling me to buy Tesla stock and you expect it to go down. That, of course, absolutely makes sense. And this video with cats, 3 of them actually, being scared of a little mouse has absolutely nothing to do with Morgan Stanley's price target for Tesla stock of $200. Yeah. Just like cats, all of a sudden being interested in this mouse after it is covered has absolutely nothing to do with Morgan Stanley increasing or decreasing price targets for Tesla stock based on its recent movements. Morgan Stanley should be increasing its price target anytime now.
How does the brain get there? We're seeing it play out, this idea of S-curves. When we did our first research and started putting out our first research on Tesla and electric vehicles in 2015, 14, 15, the IHS, which is the forecasting agency for autos and others, it by 2022 said there are going to be 250,000 electric vehicles in the world in 2022.
That's just ridiculous. Tesla now delivers a lot more vehicles per quarter.
What's the number?
7.7 million.
Okay.
So just to show you how we can be right and wrong. So it was 7.7 million. Our expectation for 2022 was for 17 million. Now, who was more right? We were.
You.
Yes, but why were we wrong? And we will always be wrong if something happens to derail unit growth.
COVID.
Because
couldn't make the cars for a
COVID,
reasonable period of
supply
time.
chain, yes, all of that.
Can they make enough cars to hit your projections now, though? No COVID.
Yes.
It seems like a very big lift.
ARK Invest projects for 2027 60 million EV sales, which sounds a bit high, and likely it is going to be a little bit high, but I bet that Cathie Wood is going to be closer to the actual number than most of the other analysts. When you project something, you are likely going to be wrong, but you just have to try to be less wrong. And if you are less wrong than others, you will be exactly like that guy that did not run faster than the bear, but did run faster than the next guy next to him.
A lot of the bears have a background in auto manufacturing,
Yes.
and they don't think that this company can ever make enough cars to justify the types of valuations that people are talking about.
So those analysts are expert at the internal combustion engine.
Yeah.
They are not expert at
Yeah.
electric, software engineering, all of that's hardware engineering, or autonomous. So, whether it's battery technology, artificial intelligence, software
So that's
as
where
a service.
that's where they've missed.
Well, it's
the
their
potential.
directors of research have missed. They
Yeah.
should, because I've been in organizations where if it looks like a car, then it goes to the auto analyst.
Yeah.
But if you have someone on the tech side advocating for, hey, wait a minute, this is really a tech company, that's a bit of a wrestling match.
Has that changed on Wall Street? The sell side?
Not really.
It's still auto analysts that cover
primarily.
Ford, also covering Tesla.
Primarily.
For example, there's this analyst, Greg Irvin, who says that Tesla does not have anything that Toyota doesn't already have. But interestingly, his Tesla stock track record does not have anything in it that a successful Tesla stock analyst would have. He said sell Tesla stock back in 2020, just before it skyrocketed, and then he switched to hold. In this video, I talk about Tesla starting to advertise. My name is Matt Posters. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.